I'm Ryan K. Hugh. Thank you for friends who have decided to stop on by to learn a little bit about what I do and kind of the information provided today. I'm an attorney with Hugh and Bordenave. We are a personal injury, business, and litigation firm. We serve clients here in Hawaii and California. My main specialty tends to be businesses, and I tend to work with small and medium-sized business owners. Um, a lot of times it is deciding at the very, very start about what business entity to choose from. And that's going to be our main focus today, is about why usually for the small business owner starting off, I usually talk about LLCs mainly. Uh, Very basic information. If you've already had a business, this might be a refresher. If this is your first time, if the pandemic or any of the shutdowns have got you hard and you decided to, this is it, I'm going to start my own business, this will be kind of valuable to kind of chart your course and about the paperwork. So I hope you find what we're talking about valuable. So typical lawyer, of course, legal disclaimer is the information presented during the webinar and the video is basically for informational. As I said, we're going to be talking about general LLC concepts and to get people kind of oriented what LLCs are all about, especially, like I said, for those first-time business owners who are deciding, I want to organize an entity to hold my business in. If you do need specific legal advice, or we're going to talk a little bit about taxes because that always comes up with starting business owners. If you need tax advice or legal advice, obviously seek the appropriate professional. If it's legal advice, go ahead and reach out to an attorney. If it's for accounting advice, definitely you're going to want to speak to an accountant. And usually when I deal with a first-time business owner, I usually say you should put together a board of advisors. So that would be your attorney, your accountant, financial advisor, an HR person, etc. So again, this is basically to just be very topical and kind of help people out. So today's agenda, before I get into LLCs, I'm going to talk about all the other types of businesses and the problems. Again, I've been doing this for 10 years. I know I don't look like it. I'm using the filter on the Zoom thing, but I've been doing this for 10 years. And with regard to choice of business entity, I frequently get a lot of questions as, oh, what about a corporation? Can I do it in a trust? What about a nonprofit? And when dealing with attorneys in business law, it's a lot of alphabet soup thrown at you. And it's also on top of that, you have these strange legal concepts or very abstract concepts, especially when you're starting to add in tech and intellectual property stuff on top of just choosing your business entity. So that first slide, we're really going to dive into what the problems are with other business types. After that, I will point out the pros of why LLCs are used for most beginner business owner situations for small businesses. There are a lot of pros to it, and we'll talk a little bit of some of the cons to them, but mainly this is to kind of sell you on the idea of taking a critical look at using an LLC for your first business. After that, we're going to talk about pragmatic stuff. We're going to talk about the documents that you will need to form this and set up this LLC. We use the terms formation or organization, and you'll see why in that slide. After that, the 4, 5, and 6 are kind of very talking about setting up, running, and the kind of the practical effect of having this LLC. So one of the positives you'll see is flexibility of LLCs compared to corporations, and we'll get a little bit into operating agreements. And then one of the biggest things is always the money matters, and I always get this question about income taxes and how LLCs work. And that can be a positive or a negative, depending on what your strategy for your income taxes are. But yes, the whole point of having an LLC and having a for-profit endeavor business is to make money. And then unfortunately, yes, the tax man will come and take some of that, and so we got to figure that out. The last part, for some of you, I know some of you are realtors and we're interested in this, maybe to help your own clients. Maybe they are thinking of starting up a real estate investment group, or they have a number of rental properties and they use you for those services. I'm going to touch upon very gently in terms of what we use LLCs for in other areas. And then finally, depending on where we are with timing, that last slide, I get a lot of frequently asked questions about LLCs or myths about LLCs, that people kind of get funky notions that they read from the internet or they see or hear from a friend. And I'm going to try and dispel those. The LLC is liable for its own debts and obligations. And basically what happens is that members are only limited to what they contribute into the LLC, and their personal assets are not on the hook. That's the key critical reason why that sole proprietorships or general partnerships are frowned upon, because it generally tends to put people on the hook, their personal assets, for the business's debts and obligations. Key thing about that, banks, some credit card companies and financial institutions, and definitely commercial landlords, are keenly aware of this personal asset protection or limited liability protection for LLCs and its members. To get around that, they usually tend to have you sign a personal guarantee, especially if this is your first business. For loan situations or for signing a commercial lease, they will always tend to lean towards getting a personal guarantee from the member. The reason being is it pierces the veil or gets around from this limited liability shield to make the person directly liable, the member or members directly liable for the debts and obligations for the LLC. Because without that personal guarantee, commercial landlords and banks would only have rights, contract rights, to go after the LLC. And so it becomes very critical. And if you go back to my earlier slides, that's why I like to use the setting up of a business bank account as one of the first critical events. That is you taking steps to separate your identity. Is my LLC has a business bank account, and then I have my own personal checking account and saving account, which is completely separate. And you should always strive to take steps to keep that separation clear. So you should sign your contracts on behalf of the LLC as a member, not as yourself, and so forth and so on, to maintain this limited liability. So before we get into LLCs, as I said, if you're a first-time business owner, you have to understand the bevy of options before you in terms of, how am I going to organize or operate this business? And a lot of times, especially very small mom and pop local businesses, heck, the fruit stand or the corn stand on the side of the road, or the swap meet kind of vendor, a lot of times they're going to be a sole proprietor. And all a sole proprietor is that if you decide to start selling any products or services, you're in business and you're carrying on as a sole proprietor. The issue with sole proprietorships is, while they're very easy to set up, there's literally no paperwork to set up a sole. It is just the fact that you are selling services or products. Is you are the business. The business owner is the business. There's no what we call separation of identity. And you'll see what that means for corporations and LLCs. But what that means is, if there's a problem, let's say a breach of contract or a tort, you'll keep hearing me use the word tort today, a tort or slip and falls, negligence. If the business owner or the business that they're operating is responsible for that breach of contract or that personal injury situation, then there is no separation, and therefore the sole proprietor has unlimited liability. That means their personal assets could be on the hook because there's no separation. The other issue, and you'll see this, and I'll use the licensing and permitting issue as an example, but lack of continuity. What do I mean by that? Because the business is the sole proprietor, the individual running the business, when they pass on, The business dies with them. Now, that might not seem like too much of a problem, but for the business owner, heck, I mean, they're gone, right? Why should they care? But for everybody else, especially if you're trying to cultivate mentor-mentee relationships, have employees, or you care about your business partners, vendors, suppliers, it's very problematic when the sole proprietor passes on. And to use that as an example, a lot of licenses and permits for regulated industries, for contractors, realtors, dentists, if it's just them as the sole proprietor, the business goes down with them. And so the thing is that not only are you dealing with a grieving family, the business is done. And what that means a lot of time, if you have client assets, let's say for a realtor or an attorney or an accountant, or you're holding somebody else's property as that's part of your business, if they're in business bank accounts and you are the only existence of the business that is the sole proprietor owner, that all flash freezes and has to go through sometimes probate, especially if they don't have any estate planning documents. So the lack of continuity actually is a huge thing because there is no perpetual existence. The business doesn't continue on after the business owner passes. Same thing goes for partnerships. Partnerships are just two or more persons carrying on for profit. So let's say me and some other, Rick, I'm gonna pick on you because you said yep and you said hi first, but let's say Rick and I decided to get into business together and we started selling lemonade. Sorry, I know that's very generic. Maybe we'll just use guava juice because we're here in Hawaii. Let's say Rick and I get together, form a partnership just to sell guava juice. Well, here's the thing. Just like a sole proprietorship has unlimited liability, now there's two of us. So the business partnership has unlimited liability for both partners, and not to mention both partners are what we call jointly liable for all the torts and breach of contract. So if one partner is going off and doing one thing in another direction and the other one is doing something else in the other direction, their personal assets are on the hook for their partnership. So that makes it even more worse than the sole proprietor, at least it's just them. In addition, it also has the lack of continuity situation. If you have a partnership and one of the partners dies, there's a question about how the business carries on now that one partner is gone. Again, there's also licensing and permitting issues with that when the license or permit is issued to the partnership and now you no longer have a partnership, right? If the definition of a partnership is two or more persons and one person is now gone and you have a two-person partnership, there's no partnership. So that is the problems with these two forms of business, sole proprietorship and partnership of just starting out. That you have unlimited liability, there's lack of continuity, and that trickles down onto other problems like licensing and permitting, contracts, your employees, and other relationships with the business. Because the people who ran the business, if they're gone, or something happens to them, or they're causing problems, or the business is causing problems to that's all interconnected. There's no separation of identity. Just as a footnote to the partnership situation, I am talking about a general partnership. I am not talking about other types of partnerships that require you to file paperwork with the state, such as what I have with my business partner is a limited liability partnership and limited partnerships. And those are other types of partnerships. But for the purposes of today's webinar, I'm just talking about general partnerships. Okay, so with those two out of the way, we turn to the other two types of organizations that people kind of consider when they're starting a business. And obviously today's situation is all about LLCs, but before we get there, let's touch upon the corporation. The corporation is a very old form of business, and what happens is to create it, we call it a creature of statute. That means the existence of the corporation is effectuated by the laws that we as a state adopted. We have the Corporations Act. And so what that means is to form a corporation, you have to formally file documents with the state to register the corporation. After that, what happens after the incorporators have made the corporation is the corporation goes about organizing itself, and that's when you get meetings, minutes, and kind of bylaws. And what happens is the corporation issues shares to the shareholders, and the shareholders are the owners of the corporation. Now, if that sounds like a long, tedious process, it can be. It can be. Nowadays, we as attorneys kind of have templates, and for smaller corporations, it's kind of a quick process. But it tends to be costly and very formal and a very what we call rigid structure, and I'll explain what that means in a minute. And the other negative is to have that separation of identity now that you've taken steps to form that corporation, which is separate from the shareholders who own the corporation, is you have a double taxation issue. Double taxation is one of the key critical reasons why corporations tend to be frowned upon in terms of using for a very, very small business. The reason being is what happens is that if you declare dividends, that is money that is coming out from the profits of the corporation, they're taxed on the shareholder's income tax return. In addition, the corporation is taxed on its own profits. That is, it's its own separate identity. So it has to also file its own separate income tax return. So there's two tax returns. There's the corporations, and then there's the shareholders as individuals. People tend to not like that because there's the cost of hiring an accountant to file the corporation's income tax return, and B, they're getting taxed as that money comes out through them. Lastly, going back in terms of rigidity, for people who tend to use business partners and they want flexible arrangements, that is maybe one business partner is the money guy and they're the ones investing in the business, but the other guy has the know-how, like maybe a chef, maybe a technical IT person, but they don't have the money and they need the other partner's money to kind of put into the business. There's no way to divvy up the dividends that are not proportionate to their ownership. What do I mean by that is if there are two people and one person has 50 shares, that is shareholder A has 50 shares and shareholder B has 50 shares. If the corporation makes $100 of profit and then they agree to declare dividends, $50 must go to shareholder A and $50 must go to shareholder B. That is why we say it's very rigid, is there's no flexibility in that, in how you divvy up or share up money coming out of the corporation. Finally, in terms of formalities, just because of corporations and their templates that we as attorneys tend to use, there's a lot of documentation that makes it very formal and very hierarchical, is that it's very rigid in running it. And so those tend to be the problems of a corporation. On that note, while we're still on this slide for other types of business entities, there's that little note is, what about S-Corps? I hear that a lot in terms of decision making. An S-Corp is a tax election status. It actually isn't a separate type of business entity. It is an effort by the business owner to ask the IRS to treat the business entity under the subchapter S regulations. And what that really means and what boils down to for our purposes today is whether or not the owner of the business wants to be treated as an employee for certain services and work done for their business, or if they'd rather be self-employed. The reason being is that, again, today's talk is about LLCs. LLCs and corporations can make the S election. It really is only a treatment in terms of certain activities about how the person who owns it, how they're to be treated for certain taxes. I don't want to get too much into that, but just understand that's why when I talk about business entities, an S corporation isn't a choice because LLCs and corporations can make that election. it has to boil down more in terms of how taxes interact with the owner of the entity. Okay, moving on. So you heard about all the negatives and cons about all the different types of entities. So why do I, or a lot of other professionals, including accountants, for starting business owner tend to recommend the LLC? They tend to be easy to set up, especially for what we call single member LLCs, is there's just one member in the LLC. It's usually the owner operator. And that tends to be very inexpensive and very fast. If it's just asking one person what they want in their LLC, tends to be very quick and fast to set up. There's a number of low-cost services in terms of doing and setting up your LLC. And not to mention a lot of first-time business owners, they review the paperwork themselves and they can actually do it on their own. And we're going to go through some what those are on the next slide. Depending on what state you're in, as I said, our law firm practices here in Hawaii and California. It tends to be inexpensive, at least filing and setting up an LLC. It tends to be much cheaper than, say, a corporation, or because of certain taxes and filing fees, LLCs tend to be easier. The next kind of positive or benefit contrasts it to, as we saw for sole proprietorships and partnerships. LLCs have continuity and perpetual existence, just like corporations. So corporations share this similar situation of continuity and perpetual existence, is that the business entity will exist after an owner passes on. That is because you've registered and filed it with your state. The entity will keep on going. Now, in terms of who gets slotted in there, in terms of being a new member, or where the ownership interests or membership interests. So I'm going to use those terms, ownership interests and membership interests. You can think of them as like shares or stocks of a corporation. They evidence ownership of the LLC. With those in hand, you can direct them through estate planning documents of who receives the ownership or membership interest after you pass on. But the LLC keeps on going. One of the key critical situations that tends to make LLCs very much more positive than corporations, if you remember my example of shareholder A and shareholder B for corporations, is LLCs tend to be flexible, especially when it comes to the money matters. For profit and loss allocation and distributions, there's almost an infinite amount of arrangements that business partners as members can kind of arrange themselves. There's also other flexibilities for an LLC, and that's what business owners tend to like, especially if they have a new kind of partnership situation. Regarding taxes, taxes tend to be very easy for LLCs. We'll talk about that more and what that means. That's because they're a disregarded entity for single member LLCs and a pass-through entity for multi-member LLCs. And the other critical feature that people tend to like is the limited liability. Both corporations and LLCs have limited liability. If we remember in the prior slide about the cons of sole proprietorships and general partnerships where they had unlimited liability for the owners of the business, the separation of identity is what's going to create that asset protection that a lot of business owners starting out would like from their business entity, which is why they choose LLCs. It's for all those reasons is that they tend to be the vehicle that people tend to use for their first business. That changes over time. Sometimes they'll keep using LLCs, but sometimes they'll convert into a corporation at a later date, and there are reasons for that. But it's for those 5 reasons, a lot of times people will stick with the LLC for a long time. So that's great. Told you all the conceptual kind of things, but what do I need to get set up first, to set this LLC? First thing you will always need to register the LLC are articles of organization. In other states, they go by different names. So for example, in California, it's called, I believe, a certificate of formation. Same thing. all you're doing is letting the state know is I'd like to register this business entity and this is my LLC. Frequently, there are a lot of informational basic things that you'll need to fill out, such as what is the name of the LLC, where is it located, what is its mailing address, who is its registered agent, what is the registered agent's address, who are the members or managers of the LLC. Those are all the things that go into an articles of organization. Second thing you generally need is an operating agreement. This is an internal contract, and that's where a lot of the flexibility that we're going to talk about comes from. And it's an internal contract between the members of the LLC. Corporations have bylaws, partnerships have partnership agreements, LLCs have operating agreements. We even have, for attorneys, we sometimes use a generic kind of template called an operating arrangement for a single member LLC. Yes, it's basically like having a contract with yourself. That is you as the business owner or sole member of the LLC, and then the LLC, you're contracting with yourself to have this operating agreement that basically runs as the internal governance of the LLC. The other thing that you need is an employment identification number, which is obtained through the IRS. Wait, I thought we were talking about small businesses or people first starting out. I don't even have employees, is what you might be thinking. Right. That being said, the employment identification number serves much like a social security number for many of us, is a number to identify the LLC. Even if you don't have employees, you're going to get an employment identification number. The reason being I list these three items first is it creates a critical event for the business owner. These are the documents that you will take to a bank and establish a business bank account. Now, banks have additional other documents that you're going to have to sign for or bring with you, maybe such as identity. But in terms of the LLC, for the LLC to own its own bank account, you're going to need these three documents. And it's set by federal and state law is that these are the things that you're going to need to bring to a banker to establish that account and show them that I have legitimately registered my LLC with the state. I have an EIN that will be affixated so that in terms of audit, taxes, and things like that, I have an employment identification number that identifies my LLC. And especially in a multi-member situation, I have created this operating agreement where we discuss and contracted with each other about what everybody's membership duties and roles are. In a manager-managed LLC, and I'll get what those terms mean in a minute, banks would also probably definitely like to see an operating agreement to know what powers or authority a manager has. And those are the main three documents. Other documents that you see in the beginning process of setting up an LLC is, if you have a very generic name, let's say you have, well, I don't want to use ABC because Google has that in terms of its name for a stock ticker, and we have ABC stores here in Hawaii, so we're going to use XYZ. If you have XYZ LLC, maybe you don't want to use that in your branding and marketing, and you want to go buy another name, maybe your 808 XYZ, right? Your registration name of your LLC isn't always the name that you hold out to the public, and sometimes people will register a trade name. Banks would like to see that registration paperwork for the trade name, because if you still, I know old school, even though I'm all geared out for tech, if you get a check written for your trade name, the only way you're going to deposit into the LLC's bank account or take payment that way is that you have a registered trade name. Some third-party pay processors and credit card companies also require proof that you've registered the trade name. Jumping down to the other type of document you might see when you may see setting up an LLC. A lot of times for business partners, they're very slow to kind of get the contours or details of their arrangement and their working relationship to each other. So a lot of times the operating agreement talks about the duties and rights of the members, but it's usually accompanied by a whole bunch of other documents that kind of support the operating agreement. There are subscription agreements, capital contribution agreements, sweat equity agreements. And you see a lot of these in terms of when one member is doing the work and other members are maybe investors. They're subscribed to the LLC to receive investment profits. Capital contribution, that is when members are bringing all different types of capital. Some people contribute to an LLC not just using cash. Sometimes they contribute their skills and know-how. Sometimes they contribute an employment agreement, which you sometimes see in a sweat equity is I have no cash, but I'm going to contribute 3 years of my life building this LLC in exchange for my ownership over the LLC. So a lot of times we recommend documenting those relationships. It's easy to track cash, right? It just goes right into the bank account. These other relationships, if you're putting in equipment, leases, valuable intellectual property, not so easy to track, and because of contract law, we recommend reducing them to writing. Other documents you definitely need if you're operating in Hawaii, right? You're going to need a Hawaii tax ID, which you usually link to your employment identification number, and you're going to need a general excise tax license. If you're in a regulated industry, then obviously you would go about obtaining your license and permits. And what happens is you will usually need to file articles of organization and operating agreement. For instance, with a liquor license in Honolulu, you definitely need to, in terms of your liquor application, include articles of operating agreement, EIN. In addition, most of the professional vocational licensing, so realtors, dentists, cosmetologists, pest control operators, all of them in their packet and paperwork will require you to provide those organizational documents. So those are all the things that you're going to see at the very beginning of the process of having an LLC. Okay, so jumping into the really nitty-gritty and details. And this slide is very critical for those of you starting a business and thinking of partnering, or somebody says, oh yeah, that sounds like a good idea. Can I join you in on that? On the positive note, LLCs are very flexible, but that flexibility tends to come in by contract law, that is through operating agreements. And when you have what we call a manager-managed situation where members join together, let's say maybe there's 3 members, but only one of them is going to run the store and they want the other 2 members or friends and family, they've given cash to this one member who's going to run the LLC. Well, sometimes the recommendation is making it manager managed. That is, the manager is responsible for operating and managing the day-to-day affairs of the LLC. The other 2 members have a passive role. All their job was to, here's money. And that type of relationship about who's responsible for what, and most people in that type of situation when you invest in another friend's endeavor is, when am I going to see a return? All of that is spelled out in the operating agreement. In a member-managed situation where you have multiple members still, let's say we have 3 again, a lot of times what happens is they'll divvy up rights and responsibilities. They'll talk about voting arrangements. They'll put in sometimes restrictive covenants. For people who are not serial entrepreneurs and running multiple businesses, if this is quote unquote your day job with 2 other members in that three-member, member managed LLC, you might put a restrictive covenant in there that says that you must spend a reasonable amount of time or put all your effort into this one business endeavor. And not to mention, you may put in a non-competition clause in your operating agreement that says, you know, you can't go and work for our competition because you're not an investor, you're working for our business. And so a lot of times, the things that we authorize or allow, or the things that we restrict or disallow, has to be spelled out in the operating agreement. If we don't have an operating agreement, then we rely on what we call default rules. And those are laws set by the state. And just to let you know, the Limited Liability Act of Hawaii is very bare minimum. I've seen a lot of situations where business partners do not do an operating agreement, or they do a poorly drafted one. and they find that they've partnered with somebody who is maybe unethical, a little unscrupulous, or to be blunt about it, lazy. And now they have to share 50-50 with this person, and there's no way to get rid of them because they don't have an operating agreement. So that flexibility for LLCs, it cuts both ways. Flexibility gives a lot of first-time business owners sometimes options paralysis. I don't know what to do because we can almost do anything with the operating agreement, but you, the business owners, have to decide in terms of your partnership arrangement under this operating agreement. So that's a positive and a negative. It's just a lot of decisions need to be made. One of the biggest things that business partners like in terms of using an LLC is the money matters. Under these operating agreements, contributions, profit and loss allocation and distributions can be handled in a variety of ways. I already used the example of the shareholders that are 50-50. Now let's switch that over to an LLC where there's one person who's the money person, and then there's one person as a hardworking person. Maybe they agree to, in this LLC through their operating agreement, that member A is going to do all the hard work, but they don't have the money, and member B is just going to invest in them. They may agree that ownership or membership interest is 50-50 amongst themselves, but when it comes to the distributions, they might agree that member A, because they're doing all the work, gets 80% of all the distributions coming out of the LLC, and member B gets 20% because they're not doing anything. They just provided the cash. Or it could be vice versa. There is a situation where we have what's called preferred distributions. One member is preferred to get their distributions over another, and so forth and so on. There's tons of arrangements. Attorneys, for instance, in a multi-member LLC situation, or possibly realtors or accountants, sometimes have what we call a keep what you kill model. That is, just because there are, let's say, four partners in the business, it's divvied up ownership 25% each. What happens is that on a monthly basis, they adjust based on billable accounts and how much ever money and business is brought into the LLC from each individual member, and they divvy it up that way. That also can be done. And again, that's the flexibility and power of an operating agreement. Little quick note about that. When you're running into a situation of money matters, especially in this area, it's very critical to be advised by an attorney, and especially a tax advisor. A lot of people tend to use LLCs as loss leaders, or more unscrupulous people tend to use them as some type of tax evasion or lowering their tax mechanism, and that is done through the profit and loss allocation situation. Maybe one member wants to take all the losses because they want to reduce their taxable income amount. And so in their operating agreement, they're going to write, oh, I'm going to take all the expenses and losses of this LLC, 99% to me. Now, sometimes that can be done if there's a legitimate basis for that, but a lot of times, sometimes the IRS and the Department of Taxation will scrutinize these situations where something doesn't seem right. And so it's best to, when approaching these money situations, that you're not going to do it pro rata, that is, your distributions and profit loss match your ownership interest. If you're going to do what we call uneven or mismatch kind of situation, it's best to get advice on those. Okay, on that segue for taxes, again, one of the benefits of why people tend to like LLCs for starting, because they're very confused by all the paperwork, is for income taxes. LLCs do not pay income tax. Rather, the members, the people who own the LLC, they pay taxes on what they receive or lose out on from the LLC. That is, profit and loss is attributable directly on the individual's income tax return. That's not the case in corporations. Again, they're double taxed. What that means is the corporation files a separate income tax return, whereas LLCs do not. And so usually what happens for a single member LLC and a multi-member LLC is especially if you're working with an accountant, they will take your LLC books and accounting record and draw up a schedule, and you're going to attach that schedule to your income tax return when you file. So people like that. It's very simple and it's very straightforward. The key critical things to understand is for single member LLCs, we call it a disregarded entity. That is, for income tax purposes, the LLC is disregarded. We only care about the single member, the individual. And for multi-member situations, we call them pass-throughs. That is, the profit and loss passes through the LLC and is directly attributable to the members that own the LLC. It is here that a lot of people, first-time business owners, kind of get turned around by the legalese and kind of gobbledygook, and kind of they'll say that I'm a sole proprietor even though they're an LLC. What they really mean is that you're treated like a sole proprietor for your income tax purposes, even though you have an LLC. And you're treated like a partnership for that pass-through status for a multi-member LLC. And so it's kind of confusing because there's the tax layer, but there's also the business entity layer. But that's usually why working with an attorney and accountant, we tend to be very kind of particular or precise about our words. But it helps us to know what you're talking about when you know the vocabulary. Okay, so limited liability. The reason why a lot of first-time business owners, and it's urged because it's so easy to set up an LLC, to use an LLC, is this limited liability feature. What that basically means is when you're setting up the LLC and you contribute capital, cash, equipment, other valuable assets to the LLC takes those, and in exchange you get your ownership interest, and the LLC then owns those assets. That establishes that the LLC itself is a separate person from its members. It's a legal person. It's not a living, breathing person. Well, I hope none of you are bots, but it's not a living, breathing person like all of you and me. But it is a person. It can own property. It can sue others. It can be sued. And why is that a good thing? That means that the LLC is liable for its own debts and obligations. That is, if it's sued for a breach of contract, it's sued for a tort claim, you're suing the LLC. You aren't suing the members or the member of the LLC, you're suing the LLC. Go ahead and write in chat your questions if you have any, and I will try and address them while I go through these last two slides. Anyway, for other uses of LLCs, especially for those of you who are realtors joining us today or serial entrepreneurial types, other uses of LLCs, because of that flexibility, ease to start up and kind of negotiating deals with other business partners, we have a whole host of other uses for LLCs other than being some type of retailer or a restaurant or any number of, even an independent contractor or consultant. So other uses for LLCs are holding companies. Holding companies don't really do anything other than they hold assets. The reason why somebody might do that is they might own a valuable piece of land, hold a valuable license or permit, or they might have access to a specialized kind of equipment. And what happens is they license, lease out, or just do a deal to receive income. Other times, serial business owners tend to set up a personal holding company and own all their various types of ownership stocks in other LLCs and corporations through this holding company. That is, they're taking advantage of that separate person feature, is that I have this holding company and it holds all my investments and business relationships in this LLC. Joint ventures. Hawaii doesn't have a joint venture statute. In other states, they have a joint venture statute which categorizes it as a specific kind of relationship or sometimes a separate entity from an LLC. But here in Hawaii, we tend to use LLCs for joint ventures. Sometimes we do use a limited liability partnership or a limited partnership, but for today's purposes, LLCs can be used as joint ventures, which is basically two established companies bringing valuable contributions to create a new brand or they're joining together their resources to launch a new product or service together. And they hold this subsidiary LLC jointly between these two companies. Here in Hawaii, due to the valuable real estate, we have a number of investment huis. Hui just meaning group. And a lot of times there's just local friends and family getting together to team up, pool their resources, right? Creating more capital. And they put it in the LLC, and that money contributed to the LLC in turn purchases property for investment purposes. Maybe it's a flip your home situation, maybe it's long-term real estate investment, but a lot of these groups use the LLC because of the flexibility. They tend not to use corporations because of the double taxation. There sometimes it could be beneficial, but the thing is that investment huis tend to sometimes use an LLC because of the flexibility and ease to set up, or they want to have a number of arrangements because, right, if you have a long-term rental income property versus a home that you're going to flip and sell in a matter of months or in a couple of years, different goals, right? So sometimes it's not a one-size-fits-all, and LLCs tend to be perfect for that situation. Finally, for estate planning real property, which kind of ties to that investment hui situation, for a lot of wealthy families or even middle income families that own a couple rental properties, or they have a couple apartments that maybe they bought for the kids a while ago, sometimes what they'll do, if they're working with a lender and there might be a mortgage on it, or especially if there's not a mortgage on it, sometimes they'll transfer the property into an LLC. And what happens is the ownership and membership interest, which is much like stocks and shares in a corporation, they will hold it in a trust. And the trust will dictate what happens to that ownership or membership interest when mom and dad pass on. That is, it directs it to the beneficiaries. In that way, transfer of the property is controlled through transfer of the ownership or membership interest in the LLC. That is, they haven't divvied up the land or the condo or the house or the apartment in different ways on their estate planning documents. They're using the mechanism of the LLC up through a living trust or trust document. Usually they want to do this because of the asset protection. The thing is that the valuable piece of real estate is owned by a separate entity, the LLC, but the LLC is in turn controlled by the estate planning documents. So that's a lot of times why people set up this multi-layered approach. If there are other questions, go ahead and drop those into the chat. But a couple other myths about LLCs. That LLCs are only for small businesses. Actually, that's not true. If you are a starting and budding entrepreneur, there are a lot of privately held companies that are just LLCs, and they actually have a lot of wealth and power. And to show how flexible they are, Amazon, Google, General Electric, I believe, they all use LLCs as subsidiaries. And in fact, a lot of times what you'll see in Hollywood for movies, when you're launching a new franchise or you do licensing deals and arrangements, many of these large kind of new brand identities, they use LLCs. So they're controlled by large companies. So they're not actually just for small businesses. Other myth, LLCs have too much paperwork compared to sole proprietorship and partnership. It does have some more paperwork, but reality is you're gonna still have to file tax paperwork. You're still gonna have to fill out things for the bank. And so a lot of times it's a no-brainer just to at least have minimal limited liability protection depending on what you're doing. Really, what it really boils down to is if you're a single member LLC, you're really just going to need to get an EIN, and articles of organization, which here in Hawaii, ours is basically a 2-page document, and a very simple operating agreement, which can be anywhere from, I'd say, 5 to 9 pages. And it's very simple. So it's not that much more paperwork. in terms of should I organize my LLC in Delaware, Nevada, and why? Nowadays, a lot of with influencers, online retailers, and people just having online presence, they tend to read these articles on the internet that say, oh, set up your LLC in Delaware or Nevada and Wyoming without looking into the underlying reason why that may be beneficial. But 9 times out of 10, if you're an owner-operator situation, that is, if you're going to have a brick and mortar, a food truck, or you're going to be a realtor and have an office, even if you're working from home and you're operating only in Hawaii, you're going to have to register in Hawaii. If what happens is if you register in Delaware or Nevada and you're operating here, you're going to register as a foreign business entity that is a Delaware or Nevada LLC in Hawaii to do business in Hawaii. So a lot of times, none of this tends to make sense. A lot of times people are sold on the tax situation. And I think I'll address that again with, I think if I looked correctly, Maria's question about how that works and why people tend to think that. So no, most times if you're an owner operator, Delaware, Nevada, or a state that you're not in just for the sake of illusory benefits, that doesn't make sense. LLCs need owners and members that must be American citizens or residents. No, LLCs in themselves don't. What that tends to confuse is the S election and the S corporation. To make a proper S election, there are certain residence requirements of the owners of the business entity, and you can't have members that are non-resident aliens as owners of an LLC that has an S election, because that's the other negative thing about S corporations. They have to be individuals, living, breathing persons. So the nice thing, you know, I was talking about subsidiaries and things like that for LLCs. That is another LLC or corporation owning another LLCs. Because LLCs are persons and so are corporations, they can own other LLCs and corporations. And in this situation, for this confusion, LLCs can have whoever they want as members or owners of the LLC. They don't need to solely be American citizens or residents. It does create extra kind of other problems in terms of banking and filing paperwork, but it's still possible. And last two really quickly, I can't share ownership in LLCs with employees like a corporation. So in that situation, somebody's thinking about, oh, I want stock options for my employees. That's not true. In fact, a lot of times for these smaller business, we don't even recommend ownership sharing. We recommend some type of profit sharing situation where they're only entitled to a share of the profits to kind of earn their keep, but they don't own the business entity in itself. So, but if you want to do that, you can do that in an LLC, same as a corporation. We just divvy up the membership interest that is the evidence of the ownership of the LLC. Lastly, LLC's corporate veil provides unlimited personal asset protection. No, it doesn't. I went over that for personal guarantee. A lot of times people get this, like, I'm immune to everything with my LLC, and they start to do risky behavior or they try to defraud somebody in a transaction. There's actually a number of situations where the LLC's limited liability shield or the corporate veil can be pierced, and it all depends on the facts and circumstances. Okay, let's jump to your questions really quickly. So from Maria, does LLC pay taxes or not taxes? I was a little confused about that part. Okay, great. Sorry, I may have run through that really quickly. So Maria, the LLC does not pay taxes. What happens is the money's lost or gained from the LLC passes on through the LLC and directly goes to the person, the people that own the LLC. The member pays taxes. Everybody, well, not everybody, but American citizens pay income taxes. What happens is the LLC doesn't pay an income tax. You pay an income tax. So what happens is by contrast with a corporation pays income taxes. That is on corporate profits. What happens is the money comes out of the corporation, then the shareholders also pay income taxes on themselves. That doesn't happen in an LLC. There is just you for income tax purposes. Does that answer your question? So the LLC doesn't pay income taxes. You pay income taxes. And I got another question. Could you please share an example of a scenario where one would be considered self-employed versus an employee of your own company? Can you please brush over once more about why that matters? Okay, sure. That's a really good question. Let's go to the S corporation situation. So what happens is when you have an LLC and going on that tax situation, if you do not make an S election, you're considered self-employed. That is, you're working for yourself and you're operating and managing and doing everything for your LLC. The way to understand what an employee means is that if you've ever held a W-2 wage earning job and you get your paycheck, right? When you look at it in terms of that little part of what gets pulled out on payroll taxes is taxes, Social Security, Medicare, FICA, all that. If you sit and think about it, if you're an LLC member and you're self-employed, nobody is running payroll because you're your own company. That doesn't mean you don't pay into those things, such as your Social Security. What happens is you being self-employed, you have to pay those. So a lot of first-time mistake LLC owners, they tend to think, oh, I don't need to pay taxes. I don't need to pay for any of this. This is great. What happens is that when you have to file your income tax return, they get slammed for not paying that. And so what happens for a lot of LLC owners is it's recommended that you pay estimated earnings quarterly. That is, you try and gauge how much money you think you're making and how much you're going to think you're going to owe in income taxes at your income amount, and you pay that throughout the year. And that's the difference of being self-employed. When you're an employee, you have to run payroll for yourself, and that would come under the S corporation election situation, which is why it tends not to make sense in a single member LLC where it's just you. However, if you have multiple employees and you're going to run payroll anyway, or you're going to have an HR company do it, then sometimes it does make sense. And what happens is a lot of times your salary is considered as an expense. The only issue again is that it doesn't really make sense for a single member LLC where it's just you to be treated as an employee because of all the HR and taxes that you kind of have to deal with. A lot of times it has to really do with how much income you're going to be making is the calculus. But in terms of self-employed versus employee, it's really a tax matter situation in terms of how you file your taxes and how you're treated, as opposed to a situation where you can be self-employed in one versus an employee in another. It really is just telling the IRS how you want to be treated. Other question. Filed and received Hawaii General Excise Tax License before trade name with DCC was. So General Excise Tax LLC name is different from the approved trade name. Should I apply for another General Excise Tax once approved from DCCA before opening my business bank account? Okay, so the thing is with trade names, all they are is an alternate name or doing business as. Generally, you're not going to open a separate bank account for every trade name because that trade name is affixed to your LLC. So let's use an example going back to my XYZ LLC that maybe you're using 808 XYZ. So how that tends to look is it's XYZ LLC doing business as DBA 808 XYZ, which is the trade name. It's one and the same entity. You would only decide to have separate accounts if there's a reason to do that, or it's easier for your books, or you're going to separate out business functions under different trade names or brands. But for the most part, if your trade name is already fixed to an LLC, that is, you did the LLC first and then registered a trade name under the LLC, it's one and the same. If you did it the other situation where you have the trade name and then you created an LLC after, what you can do is assign the trade name to the LLC. But with regard to if you already got your license, you got your license and your general sorry, your Hawaii tax ID number and general excise tax license with the trade name, then yeah, you're going to need to set up a different Hawaii tax ID and general excise, because that is as to you as a sole proprietor that registered a trade name, not as an LLC that got a trade name affixed to it. Jumping down. Limited liability shield point has always made me curious as a realtor. Since I am the only member and the agent, wouldn't I remain personally exposed because I have been the agent as well as the brokerage? Right. So that's a very, very good question. So remember I said that personal guarantees are a way around it. In terms of tort liability and other malfeasance types of claims like fraud or professional liability situation, by law, you cannot limit or waive your liability because of your profession. That is, with regard to your relationship being a professional, whether you're a lawyer, doctor, realtor, you will always be personally on the hook because of what your profession is that it's one thing to own a convenience store or a restaurant, and you have an employee that kind of does something to your customer or guest. It's another thing to be an attorney directly advising your client, or a realtor directly handling your client's property or money and funds. And because of that special nature and relationship, yes, you're going to be professionally and personally liable. That's why we, for all these regulated professions, we have those standard codes of ethics. We have our continuing education requirements. But in terms of liability, that's why the insurance industry offers professional liability insurance for all these types of professions. And really what you want in that situation is to maintain good ethics and habits for yourself, because it's what's called upon for your profession, but also in terms of your stress level and kind of handling professional claims and personal liability claims. You're going to want to have that malpractice insurance. I'm going to be doing hopefully more of these and shorter bite-sized ones throughout the year. If you have topics as a potential business owner, or if you're a current business owner and I want to keep it topical wise of, maybe 20 to 30 minutes and then having chit chats, go ahead and email us your suggestions. I'm also thinking of starting to do live streams and other kind of outreach, especially because we're all trying to get Hawaii restarted in terms of our economy and kind of things going. So I find that even friendly, directional, general information, as opposed to specific advice, so personal kind of advice and confidential consultations, is that these directional kind of things kind of help people kind of like, I don't know which way to go. So go ahead and email us and let us know. Other than that, we're going to circulate an email after the fact. So you'll have access to this. I have a handout that goes with this, so you can review everything, and everything will be on YouTube. So if somebody missed this, go ahead and share this with them. Other than that, any last final questions or parting words? And thank you for joining me after your lunch, or maybe this is a late lunch, or maybe you're eating at your desk. If there's nothing else on that, I'm going to bid you mahalo and a farewell. Thanks, everybody.